Well, hello, Mavericks. This is Rob Reinhold. I know you were expecting Joe, and now you're a little bit disappointed. Look, it's summertime. I was on vacation last week. Joe filled in for me. Joe's on vacation this week, so I'm filling in for him. So I love meeting live with our traders. This is where we really get to go over the things that are happening right now in the market. We could take a look at charts right now to put some potential trades in place. As always, make sure everything goes through your own personal trading plan. So let's get caught up on the week. So this week we've had some pretty choppy price action, had some pretty big news out of world growth and world GDP growth. And so we had two things happen. We had JP Morgan, they downgraded the ECB, the European zone, and they said, hey, we expect there to be a recession from basically now until the first quarter of 2023. And then the IMF came out and downgraded global GDP, and they took it down 0.7% for 2023. Now, a lot of people would expect that the markets would be down heavily on this news. The markets are actually fairly flat, slightly up on the week. And what we need to understand is that when you finally get these downgrades are always late. They're always like late to the party. And so we usually get these things closer to bottoms than we do at tops. Now, look, I'm not in any way, shape, or form calling a bottom to this market. But what I am saying is that these are the things you see around bottoms. We're starting to see estimates come down. Numbers are getting taken down. We just had really bad earnings from Walmart and Microsoft. They're taking numbers down. So what happens is when all these expectations come down, people unwind their portfolio. And then if expectations stop going down, all of a sudden markets can reach a floor. And then all it takes is the expectations for the numbers to go up and get better, and then stocks can start moving higher again. So we're at the end of this potential cycle on the downside. We've been calling for a pretty nasty market all year and a flat summer. I do think we still have one push lower, but we'll have to take a look and see that in the fall. I don't think we get any major moves until after Labor Day. So let's take a look at what happened this week. This week we got consumer confidence was a little bit weaker than expected. The Richmond Manufacturing Index was actually better than expected. Durable goods orders, much better than expected. And pending home sales just got crushed. This is year over year, this is a month over month number. Year over year is down 20%. So home sales are definitely slowing, no doubt about it. So let's take a look at how the market reacted to all this news this week. And you can see that we really had very little reaction. The Dow is flat. The NASDAQ is flat. The spiders are up 1/3%. The Russell is the outperformer, up 0.8%. Gold was down for the week and oil's up. And I just checked oil. This is actually closer to a plus 3% gain on the week so far. So let's jump in and take a look at what has happened over the past couple days here on the charts. And you can see that we broke out above some key resistance. This is just key resistance that we broke out of. We came back and retested, and it held. So it held at the moment. The big question is, how much upside is there in this market? I personally don't think there's a ton of upside, but there's no way that you can take a look at this chart and say, this is a great time to go short. It's just not. It's not. If I had to make a trade, if someone had my family and was threatening them and said, you have to make a trade to save them, I would make it on the long side, but it would be the wimpiest bullish trade you've ever seen. So this is the SPY. You can see we got a breakout, a retracement, and we held that retracement. Now remember, we are literally like an hour and a half from the FOMC meeting. And we know that in FOMC meetings, we can get a big change and we can get a big reversal in things. I am not ready to call anything until we get that FOMC meeting. The NASDAQ basically did the exact same thing. We came down, we tested that support, we held it, and we now have a bounce off of that. Like I said earlier, I want to see, first of all, how this candle ends. If this candle ends near the high after the Fed meeting, this is definitely more of a buy than a sell here. If this market loses all of its gains and goes red after the Fed meeting, I think you got to go back to more of a zero and waiting for that support line to break. If that support line breaks and the 20-50 moving average are broken to the downside, then I think it is time to look to possibly go back to more of a short portfolio overall. And I wanted to take a look at oil. Oil's been driving a lot of this bullishness lately, and you can really see when oil started to really break down, the market actually firmed up. And the market does want to see lower oil and lower gas prices because that will ease up the burden on the consumer, which means higher consumer spending. Weaker oil is actually good for this market. And you can see that oil, while it's up this week, it's really doing more of a descending triangle here. So oil to me looks neutral to slightly bearish. But if oil does start to head lower, I think that is even more positive for the equity markets. So this week, this was our call on the weekend on the trading room. We basically had zeros, and that's basically what we've seen this week is just zeros. We are expecting this going into a Fed meeting. It is no surprise whatsoever. Now let's talk about going forward and take a look at where are some potential targets. So as you can see here, we are past that point of resistance. But the big question is, we need to find out, okay, where is the next possible target? If we do break this resistance area, where is the next resistance? And we can see on the SPY, it's up here somewhere around 407. So let's talk about that in terms of potential gains, potential profits. So basically, if we break out of this, let's call it 401 for the sake of easy math, we think that there is a 1.5% possible rally up to the next level of major resistance. If that is the case, then you can't be all that bullish. If you are bullish and you say, okay, well, I want to tilt my portfolio to being more bullish, understand that we have maybe 1% before it gets to the next level where it probably is going to take a pause. So for me, like I said, if someone forced me to make a trade, I would have to be on the bull side, but it would be very wimpy because I don't see a ton of upside here. I've got to upgrade this to more of a +1, on this. So I'm looking at basically +1 on the week, +1 on the month. I am slightly bullish, and that is that's it. All right, well, let's take a look at some trades that we talked about over the weekend and some of the trades we talked about on Monday and Tuesday and go over how they're doing. First one I want to go through is EQT. EQT, we talked about this one last Thursday as a nice little breakout of the moving averages. And you can see it had a nice Monday, Tuesday, Wednesday. It's come down a little bit, but this is the kind of price action we like to see. Long lower shadows. That's an indication there are still buyers out there waiting to buy this. So I like this one. I can't remember the trade we had on this one, but most likely with the utility stock, this was like, probably a 40-45 diagonal call spread, something like that. Next up, United Health. Corey talked about this one over the weekend. And you can see here, we had 2 attempts, Tuesday and Wednesday, to break through this resistance. Now, the trade Corey talked about was a 530, 550, 570 butterfly. So 550 is right up here. So he's looking at this saying, hey, I think this is going to claw its way up into the 550 area. Now, he's gone out 2 months for this trade. So he's giving this trade plenty of time. Everything still looks fine on a longer term chart. Shorter term, these candles are a little disappointing. But on a butterfly, this is going to have virtually no effect on the position as you can wait for that to drift up to the 550 area. So for me, United Health still looks good. I still like the trade, and this thing is outperforming a market that's not going anywhere. Next up, Enphase. This is one we talked about as well. This one was showing a lot of strength. It had earnings after the bell last night, and you can see big jump higher. So great job for our traders that got into Enphase. Big winner, up 16% on the day. Now let's go to sideways. Google also had earnings after the bell, and we've been talking about Google here being sideways for a long time. So we love it when we can get earnings out of the way, because again, earnings are a pretty big risk to a butterfly in a sideways trade, because there's such an explosion of movement. And with a butterfly, you're basically saying, hey, I don't want there to be much movement. Once we get through earnings reports, all of a sudden now we can start to take a look at some really nice sideways plays. And I do think that Google has proven that with those earnings, it is not going to go any lower in the short term. The question is Google ready to run and break out of 120 and take a run up to 130, 140? This is definitely not the market conditions at the moment that would say that that is likely to happen. If the market were to get substantially more bullish, okay, you could make a case to me. But where we are right here, right now in the market cycle, I really think Google is going to just hang out in this area. So this is where you get to go in and basically pinpoint where your midpoint is. You could say, hey, I think it's closer to the 110. 110 would be just slightly bearish, but pretty much neutral. You could take a look at the 105, 110, 115. I personally think it's probably going to be a little stronger than weaker. So what I would be doing is I would be taking a look at something like the 110, 115, 120. So basically saying, hey, I think it's going to drift up into this area, and this is going to be my max gain point right here at 115. I don't need to give this a ton of time. This is Google. It's going to move 2-3 points a day. So I think going out either to next Friday, so that's going to be 7 days, is probably about the right time frame on this one for Google on the sideways. Corey gave us a bear call spread on AT&T. AT&T is down on an up day, and he gave an 18-19 bear call spread. So this is already looking really nicely here. A nice theta positive trade that's likely going to drift lower. This is a weak stock in a weak sector that definitely looks lower. It might be a little late to enter that 18-19. If you want to, you could take a look at an 18-18.50 and make a credit a little bit better for you on this one. And then Schwab triggered yesterday. This is a stock that is in a low base. So one of the strategies I love to do, and I like to do this more on high bases than low bases, so let me draw out a high base here. When things are in a high base, what's happening is they're just going sideways after a long run. And I love to get into positions here and basically sell a diagonal call spread on it. Well, but enter a diagonal call spread. So I like to go long the calls and then sell this call short term. What this does is creates a positive theta trade with a little bit of delta. And if it stays in this range, you get paid for that. But if it does break out, you get a chance to let that option expire. You can buy it back, and you can actually participate from the break higher. I'm looking at the same thing here on Charles Schwab. I think 60 is what you're looking at. So I'd look at going out and buying like the September 65 puts, and then selling either this week or next week's 60 puts. That's going to create a diagonal put spread that basically says, all right, 60 is my max gain point. If it goes to that point and stays there, that is my best case scenario. If it breaks down and goes lower, I'll make a little bit less money, but you've got a lot of protection for letting this thing bounce up against you. So I do like this one. So let's talk about this week. This week, it is literally all about FOMC. So you can see we have the FOMC on the board. And so it is a big, big deal here. So FOMC today at 2 p.m. Eastern time. As you can see, the forecast is for a raise of 0.75 basis points. Last meeting, they did a surprise 1%. I think the market has deteriorated enough that there's not going to be a surprise here. I think the market wants 75% or 75 points. I think the Fed will give it to them. The big question is, does the Fed bring down their estimates? And with inflation not peaking yet, remember, we got the June CPI and it was nasty. It was a nasty number. It was higher than it was the month before. And so I don't think the Fed can slow down whatsoever. The question is the market ready for that? And that's really the question that you have to ask is the market ready for that? Because if it's not, then it's definitely going to be a headwind for equities. Personally, I think the market is ready for it. I think the market has done a lot of selling. People have changed a lot of their expectations. People have brought down numbers. I think they kind of understand where the Fed is. So if the Fed remains hawkish, I don't think it's going to weigh on the market much. That being said, it's definitely not bullish, the market either. So I think this Fed meeting probably comes and goes, and not a lot changes in the market because I think the Fed is going to give the market exactly what they've already priced in, which is 75 basis points and the expected raises through the remainder of the year. On Thursday, we do have a GDP. Now, this is advanced GDP, meaning this is the first reading of second quarter GDP. The expectations are for a quarter-over-quarter rise of 0.4%, so slightly better than the first quarter. But when you take a look at it year over year, it's down about 1.4%. So when you take a look at this, this will mark the second consecutive quarter of negative growth. Now, that is traditionally used as the definition of a recession. However, that's actually not who determines what a recession is. There is, and I cannot remember the name, NABE, National Association of Business. I can't remember what it stands for, but there is a government body that actually comes out and says, we are in recession. Now, yes, they do use 2 consecutive quarters of GDP in their numbers, but that doesn't mean it's a recession to them. Now, here's the ironic thing is that when they finally come out and say it's a recession, the recession is likely over. Who knows if we'll get the designation that we are in recession? Regardless of the case, we have 2 consecutive quarters of negative GDP, and that's exactly why we've seen the weakness in the market that we have. This number is likely not going to mean anything because we just heard from the Fed. If we hadn't heard from the Fed, then people would say, okay, this is going to change what the Fed is going to do. Well, the Fed already has this number. They already know it. And so they're not going to change their policy going forward just because of this number. So as I said, I really got to look at upgrading my outlook slightly to just the wimpiest bull you've ever seen. And this is all in the context of I don't think we have a major move until after Labor Day. So I truly am neutral here. So let's take a look at our sectors here and just see what they've done so far this week. The big winner was energy, and second is utilities. You don't typically see these two as the best 2 sectors, but here we are. Utilities did well. Energy has done very well. Oil is up about 3% for the week. Let's take those out. And really, let's take a look at the other 9 here. Healthcare was the best outside of energy and utilities. We had a +1 on healthcare. We said healthcare is one of the sectors is likely going to do a little bit better than the other. We also liked tech, that we thought that was going to do slightly better than the other. But we also liked consumer and thought that was going to do slightly better than the other. But consumer has been the worst sector this week, down 2%. Everything else pretty much close to flat 9. Financials, materials are weighted down. I do think materials are really going to struggle here. As global growth estimates come down, this is a big deal for third world countries and countries that produce a lot of commodities. When these prices come down, like we've seen in copper and iron, it just is very difficult for those economies to get strong. If you want to pull up a chart next to you right now, take a look at the VT, ticker symbol VT. That's the World Total Index. The World Total Index is still in a downtrend. It's still trading below its 20 and 50-day moving averages. So while the U.S. market has actually done a little bit better, the world market is still really, really hurting. So the outlook is for, again, slightly bullish here. Now, I want to start a poll here. I want to see what our traders think. So I'm going to launch a poll. Please let me know what you think about this market, and we will check it out here. All right, numbers are coming in. All right. Well, just as I suspected, let me pull this over here so you can see it. We've got a whopping, look at that. Most of our traders are at 0, +1, -1. So our traders are really kind of weighed out on the same place, sideways to neutral. So good. I think we're all on the same boat here. So with that being said, let's talk about potential trades. Now, I wish this wasn't right before a Fed meeting because I want to take a look at some potential trades here. But I fully understand that in 2 hours, these charts are going to look wildly different. And so if you're looking for shorter term trades, I think you have to wait until after the Fed. If you're looking out till August, September, I don't think this meeting matters all that much. So please go in and type in the trades you want to take a look at. I know I've got one or two that I want to take a look at. But let's start building out some trades to look at. All right, so I'm going to take a look at the one I liked, EDU. EDU is New Oriental Education. Now, the Chinese internet stocks have been very strong. They've been very strong overall, even when the rest of the market was actually quite weak. But we got a nice breakout here of a pretty long ascending triangle. Sorry, my lines are not cooperating here. There we go. Pretty long ascending triangle. A nice breakout today. This is just something that's been building energy for a breakout. I do like this one. If it was a different market, if it was a raging bull market and we were at a +2, a +3, I would be much more aggressive on this. Because I'm not that aggressive, I want to do something that's pretty wimpy. So I'm thinking about something like a 24-26 diagonal call spread. That is a super wimpy trade. It's probably going to cost you about $1.50. The most you're going to make is 210, 205, and that's the trade. It's a low delta trade with positive theta to where if things fizzle out and they don't really go anywhere, you still make a little bit of money. So these are the kind of trades we like here. These diagonal call spreads, targeted butterflies, stuff that's +1, -1, closer to neutral. The market is just not telling me to be wildly bullish here. It's telling me to be the wimpiest bull you've ever seen and to have mostly positive theta trades. All right, let's go on to some other trades. We've got CRSP. So this is CRISPR. For any of you biotech nerds out there, CRISPR is the coolest name. This is the technology that allows us to do gene splicing, to where we're now going in to be able to splice off certain parts of a gene, put it into another part of a gene. It's kind of scary stuff of what you can do with it. But this is the stock. They named it CRISPR. They're in the biotech sector. And when we take a look at this one here, we do have a nice, sorry, I'm on a 4-hour chart. We have a nice run up and then a bull pullback. Very, very nice. Look, I can't say these are the coolest candles I've ever seen off of a bull pullback. We have a long upper shadow yesterday, but we do have a long lower shadow today. It tells us that there are people in there buying. Now, what I always like to do when I take a look at stuff like this, I say, okay, how well is this doing compared to its sector? Now, I'm using TradingView. TradingView is a very cool program. So I like to go in and I just hit the compare symbol. And I said, compare it to the biotechnology ETF. And so the big question is, has this been a better performer than its industry group? And over in June, you'd have to say no. The IBB, this gold line here, clearly did better than CRISPR. However, starting about June 12th, we started to see that CRISPR was a much better performer than the IBB, which is exactly what you like to see when you're looking at a trade. Is the market strong? Okay, it's a +1, so we're mildly bullish. Is the sector strong? Yes. Healthcare is sort of strong. It's a +1. And is the industry group strong? industry group is fairly flat here, but are you in a stock that is outperforming the industry group? And the answer is yes. So when we put all of this together, this definitely looks to be a decent trade. The big question is, where is the target? And this is where I think, as our traders, you need to be very realistic of where things are going here. If someone says, Rob, what about a target of 86? I'm going to say you're crazy. You're crazy. That is 9 points away. You're asking for a 15% run in this market. You're crazy. However, the trade was a 75-81 bull call spread. I think 81 is a much more reasonable target, much more reasonable, and I do like that trade setup. I'd say maybe even take a look at going down to 80. Maybe go to like a 76-80 to just tighten it down a little bit more. Again, whenever you are working with your vertical spreads, the bigger you make them, the more risk reward you're building. But if you squeeze them down a little bit, then things don't have to do as much for you to be profitable on this. All right. Thank you very much, Brian. Let's see. What else do we got here in the group? CWH. Camping World. All right. So here's CWH. Turn moving averages back on. Okay, we've got a nice bottom here. We have come up above the market. So let's talk about this stock. And I'm going to go ahead and throw in the SPY as a comparison. And I just want you to see that this stock is fairly comparable to what the S&P has done, especially over the last couple of days with the pullback. The S&P broke above its 50-period moving average on Thursday or on last Wednesday. We peaked out and we've pulled back. So this is very similar to the S&P in its pattern. And so whenever I see that, it's really you're trading the market on this one mostly. This one is not showing any sort of outperformance to the market. Now look, this is showing some outperformance to the sector. The consumer sector is weak. This thing is actually held on. It got hit on Monday, but it's held on really nicely Tuesday, Wednesday. I truly think this is a trade that if the S&P goes up, you're going to win. If the S&P goes down, you're going to lose. It's not a bad trade, but here's the question is this the best? Is this the absolute best? And what I always like to do when I get into this situation is I go into Finviz, and I put in the ticker symbol, and I say, hey, you know what? Let me come down here to the industry group. Let me come down to recreational vehicles. And what I'm going to do is let me then sort out any low volume stuff. I'm going to get rid of anything under 1 million shares. That leaves me with 5. So here's the industry group, and we sorted out for symbols that have over 1 million of average daily volume. We have 5. And I want to go and sort by performance over the past month. And over the past month, Camping World has been the best performer. And so if you are looking at this industry group, you are absolutely in the right place. You want to go with the strongest stocks in the group. Now, let's say that this THO, which is Thor Industries, which also makes RVs, let's say that they were a better performer. That's where you'd say, hey, you know what? I like the market, I like the sector, I like the industry group, but this stock is actually performing better. Let me take a look at that one and see which one is actually better. But now that we've done that, we've gone in and seen that, okay, this is the best performing over 1 million daily volume stock in this small industry group. Yeah, you're absolutely in the right place. Let me come back to the same thing. Where is your target? Where's your target? What are you asking for it to do? And the trade was for $25.2750. So you're asking for $1.50. $1.50 on a $26 stock is about 6%. And that's, again, I'm just questioning, are you asking a little much? Now, this is where it sort of stinks when you're dealing with these smaller price options, is that you may only have a 25 and a 27.50 strike price. That is literally all you have. And I'm looking here and I'm just seeing a whole bunch of resistance. A little bit lower than that, just a whole bunch of resistance. And 2750 is where resistance is. If there was a 27 available, I would love to see a 25.27. I think that's going to be better. Also, you could diagonalize this, go out to like a September, August diagonal. I think that would be a little bit better to give it a little bit more time. Just wondering if you're asking for a little bit much. This is not a super volatile stock. The stock doesn't move a ton. All right. Thank you very much, Joe. All right. Here we've got TAP, which is Molson. I am not a beer drinker. Everyone told me for years it was an acquired taste. I kept trying to acquire the taste. And finally, after about 10 years, I realized, hey, if it hasn't worked in 10 years, you're never going to acquire this taste. So here we are, Molson Coors, we're breaking out, had a nice little pullback. And you can see that we had, we're not getting great candles here. I've got nothing wrong with this position. The big question is, where's the upside? If you wanted to play this as a sideways, a slightly higher +1, I'm all aboard for that. I think that's a great setup. This is in the consumer sector, so I would look at the consumer sector, make sure that, hey, that's where you want to be putting your money right now. Maybe there's some better sectors out there. But, this one's fine. I would just say, what's your target? 59 is your target. So you could absolutely build a trade with 59 as your target. You could do like a 56, 59 diagonal spread. You could do a 56, 59, 62 targeted butterfly. There's things you can do, but just like everything here, I don't want to get too far out over my skis with Delta. Until the market really breaks up or down, I want to be as non-directionally as I possibly can. So I do like this one as a 0 to a +1 trade, and I think there is some money to be made on it. Just you don't make a ton of money on these sideways ones. All right, got one more trade that people want to take a look at. Is H&R Block, HRB. By the way, thank you, James, for TAP. All right, H&R Block. Now, H&R Block, this is a stock that just had a killer earnings report, surprised everyone, never came down, just never came down. We finally had a pullback in June. Now, I'm going to overlay the S&P over this, and I just want you to see how much this thing is outperformed. It's absolutely incredible. Yes, when the market took a big fall, H&R Block did pull back. But since that time, H&R Block has gone up substantially more than the market. So it basically tracked it on the way down. It did what the market did on the way down, but it outperformed on the way up. So this is a great sign that you have a stock that has more people buying and selling than the average market stock does. So the only question I have on this one is entry. These ones are hard to get into entries. They're just hard. You've got a high base that just broke out right here. So we could draw, our high base breakout that we had. This would have been a much better entry a week ago. We have been moving up. It's very hard to really take a look at these and say, okay, well, where's the entry points? Sometimes these things just keep drifting up. You can absolutely play a stock like this, but you have to play it in the right way. You have to understand, okay, this might be at a swing high. And if it is at a swing high, then I need to play a strategy that allows me to sit through a bull pullback, sit through a base. So again, this is where you go longer out and you take a look at, a possible diagonal call spread. You take a look at a longer term targeted butterfly. That way, if we did get this run and it does start to pull back, it's not painful. If you go very directional here, I just think that, it could work. The momentum is in your favor, but once it's already run from 38 up to 39 on this stock, that's about a 3% gain. This thing's not a real fast mover. I think you want to play a little bit more defensive on the bullish side. This is where I absolutely love diagonal call spreads. So going out and doing like a 36.39. And if it does have weekly options, then I think you sell next Friday's 39. And if it blows through this resistance and keeps going, you're going to make a decent profit, probably somewhere around 20%. If it just keeps moving, great. But let's say it pulls back to 38. Your 36.39 longer term diagonal call spread is most likely going to be flat, even though it pulled back. Why? Because you had that theta decay on that 39. And then on that next Friday, you take a look at your 36 calls, say, okay, what do I want to do with them? Do I want to just bail and take a zero? Do I want to hold and hopefully this call will increase the value? Or do I want to sell the next week's diagonal call? And maybe you sell the 38. You roll it down a little bit. Now you're in a 36.38. It's more horizontal at this point, turning into something sideways. As you can see, this is where you have a lot of options on what to do with your positions. Whereas if you just go long calls and you get a pullback, it's very difficult to sit through those. And if you're using stops, you get stopped out all the time. Where you use a strategy like this first to let the trade kind of develop, then you can actually make some adjustments down the road. All right, well, that is the end of the trades I have. I think everyone like me is waiting for the FOMC. The FOMC is coming out in an hour and 20 minutes. My personal opinion on what the market does is that we are going into this market sideways. We're going into this announcement sideways. It's maybe slightly bullish. We are above moving averages, but not much. The moving averages are both sloping sideways. There's not a lot of momentum here. My personal opinion is we get a whipsaw. Now, what a whipsaw is that it simply goes up, goes down, and by the end of the day, nothing has happened. Except anyone who had stops close to the market got stopped out, longs and shorts. This is a trade that I think if you've got, going into this meeting, if you've got a directional trade on and a fairly tight stop, I don't care what direction you are. If it runs up and you're short, you're going to get knocked out. When it plunges down and you're long, you're going to get stopped out. And I think by the end of the day, we're probably about where we are today, which would leave us with a nice green candle, which is telling us, okay, this market is a little bit more strong than weak, but not all that much. So I want everyone to be very careful around this announcement today on any positions that require tight stops. I think you're much better off to just sit and wait for that whipsaw action to dissipate. Let's go ahead and wrap it up if we don't have any more trades. Sideways going into the FOMC meeting. I think you wait. Wait for that whipsaw. Let that candle come in. If you say, hey, I want to wait late Wednesday to enter trade so I can see what the shape of that candle is today, I love it. I think that's a great idea. Even better, you say, I want to wait till tomorrow morning. I remember last month, I believe it was, the Fed came out, the market surged 2 or 3%, and then the next day the market gapped down and just fell for 5 straight days. I think that is a possibility, and I think you want to be very conscious of that. So I even like waiting until Thursday to make sure that there is a follow through to today's movement. So if today we end up, 1-2%, I think you want to take a look at tomorrow morning and make sure that's going to hold before you enter any more bullish trades. That's it for me. Thank you so much for joining me, and Joe will be back next week. Take care, everyone. Goodbye.